and it is looking pretty solid. Ronak Onkar is with us, co-fund manager of equity and head of research at PPFAS Mutual Fund. And of course, PPFAS Mutual Fund is are the calm guys, are the stable guys, and fantastic return guys. Ronak, I hope I didn't overstate things. I don't think I have. But what are you guys doing? I mean, it's looking once again like the storm has passed, calm has returned to markets, and we are back on a slightly upward-looking trajectory overall. Although I was still looking at the NSE 500 group of companies and seeing from the 31st of July till now, what is the lay of the 500 stocks, how many are up, how many are down, and I mean, there are lots of stocks down 15, 20% still. Lemon Tree is right there on the top of the list. I mean, have you found any of these sort of stocks which have fallen in this global sell-off that you found attractive?
Hi, Prashant. Thank you for inviting me. So I don't think you oversaid it, but I think the return point, which probably will have to struggle for a while, because since we spoke last time, a bit of cash has now built up in the portfolio as well. We are at about 16% cash. And your observation is correct. There are many companies in the Nifty 500 which have fallen by 15-20%, and that might seem like a substantial drop. But if you see a little bit, zoom out a little bit and see over a period of 3 years or 4 years, they have gone up 200-300%. So a 10 to 20% drop may not significantly change the valuation of that business, whereas the business has not grown by that multiple. So you have to be very cautious when you look at some of these falls, that they might feel like a significant drop in percentage terms on an absolute basis, but actually the business should also catch up to that level, so the valuations make sense over a period of time.
Ronak, hi, afternoon. Rima here. Last time you told us that you're cautious in the capital markets business, they're cyclical, and you've trimmed exposure to some of these capital market plays. So in the last 2 months, can you tell us how your portfolio has changed?
So not much has changed, Rima. So we have been cautious about the capital markets businesses, and we have been trimming those positions. And we have been adding the companies where we think the valuations are reasonable, which is right now mostly in private sector banks.
Okay, you're adding positions in private sector banks. Hi, Ronak. So the look is new. It's a good new look. So the portfolio, you're saying the difference is that you're adding banks. Anything else? What else is new in the portfolio in the last 1 month?
Sadly, nothing new in the portfolio. It's been the same portfolio. The little bit of cash that is now added, which was somewhere about 15%, is now 16%.
That I mean, I know you guys have been probably running the highest cash levels in the industry because you took a cautious view and valuations were shooting through the roof. But incrementally, what is it apart from private sector frontline banks where you're seeing some sensibility emerge, where perhaps you've started doing the math, started doing the homework in terms of potential ideas? Obviously, I'm not asking for stock names here, but areas where you see some meaningful value.
So I'll tell you, there are a lot of ideas that we internally discuss and the sectors that we look at. The only problem over there is most of these sectors have also been bid up in the last run-up. So even if the companies that we own, say IT services businesses or some capital market stocks, or even the banks that we own, even those valuations were not as comfortable as they were earlier. So where we are adding a little bit, that does not mean that these are extremely attractive valuations, but a little bit reasonable to accumulate. But rest of the companies in the portfolio, I would say, remain in a stable valuation to a little bit overrated valuation, but it's not a sell-off valuation. You have to be cautious about the business as well. And we are seeing the business growth. So even in our international stocks, which is now about 13% of the portfolio, we have seen stable earnings growth coming back to some of these larger companies as well. So IT services, tech has been doing well. We keep track of that. We are also tracking companies in the banking side where we already own bulk of them. So it's mostly about balancing the positions in the portfolio as to how much portfolio allocation we want to do. Rest of it is looking very, very difficult to find good ideas for right now.
All right. Hi, Ronak. When you talk about international stocks, you talk about the FANG stocks, right? Which are 13% of your total mix.
Yes.
And HDFC Bank continues to be your top-weighted stock at around 8%?
It is still the largest position that we own, followed by a couple of PSUs that we own.
All right. And PSUs would be, I think, Power Grid and Coal India are some of the top-weighted stocks, right?
Yes.
All right. So HDFC Bank continues to remain top-weighted, and you continue to remain positive on PSUs like Power Grid as well as Coal India. Ronak, I wanted to ask you about the tech space. You seem to have done a bit of a reshuffle, at least as per what I have in the last disclosed numbers. OFSS, if I'm not mistaken, it's been a 3 to 4 bagger for y'all. But I think you'll have completely exited out there. You could confirm that. And what you'll have done is you'll have gone and added the big boy, Infosys, on the base that was maybe a couple of months ago. You'll have increased that position by around 80%. Tell us more how you're reading tech.
Yeah, so in IT services, the big challenge with product companies like OFSS is that the growth comes in a very lumpy manner. So for example, a company like a software product business like OFSS, if it has to grow, it has to license new customers, and suddenly you will see a spurt of profitability and spurt of revenue growth. That has actually happened in that business. Whereas the valuations have been taken to a level where even the company's past valuations have not seen that kind of growth. So the business model has fundamentally changed, but the valuations have now remarkably changed for that business. On the other hand, if you see IT services companies, the large cap ones which are more stable, they have shown a little bit of change in sentiment. As we have seen, tech spending again has come back in the customer countries where they operate in. These companies are now showing a little bit of growth. But we have to also be cautious as to how much you pay for this growth. So at the time when we bought a couple of months back, some of the larger cap companies were looking reasonable. They have also now inched up in valuation since that point in time.
Ronak, speaking of technology, let's talk about that 13% part of your portfolio, which is US tech. There's a lot going on, right? You own Alphabet. That's one of your big holdings. And just, I think 2 days back, we had that Department of Justice ruling coming in. Now they're talking about breaking up Google because of antitrust issues and all of that. So I don't know, I mean, whether some of this, and this is not noise, this is actually real news now, at least the Google case, whether, how you're interpreting this. And in general, tech earnings in the season gone by, we had a bit of a sell-off coming in as well. But for your portfolios, and since you're still invested, what are the trends you're forecasting, and what's the earnings growth that you still think will come through?
So the earnings growth so far has been very positive, and it's actually surprising to see companies of this size can also generate that kind of earnings growth. And that's because of the nature of the business model, where it can be global, it can scale without too much of reinvestment in technology. And on the other hand, there are other segments that these companies can reinvest in through the existing cash flow of some other business. So Google, like you mentioned, can take the cash flow that they earn from the advertising business and reinvest in the growth of cloud computing. Same thing we have seen with Amazon, same thing we have seen with Microsoft as well. So that reinvestment of capital at a high rate of return is something that we find very attractive in some of these companies. But of course, not all of them are very cheap and reasonable at the moment. And we have to be cautious even in them. Regarding the Justice Department's ruling, I think we will wait for the actual result to come out. But it's actually well known that Google has a very strong competitive position across many countries that they operate in. And they are a large market share in search advertising. And it sometimes might seem like it's an anti-competitive behavior. I think we should wait for the actual ruling to happen. Regardless of the fact the business economics does not change, the cash flow generation ability of the business does not change. It just might be a different organization. But I don't want to speculate. We'll see how the results actually come out.
Got that. By the way, you own Apple as well, right? In that
we
tech
used to own
portfolio?
a few years back, but we sold too early.
Too early.
But Berkshire's also sold now, so I guess you are ahead of them. Would you want to see it that way? You're ahead of Warren Buffett and team.
Too
That's
far
a nice
ahead.
way to go. Okay. By the way, Ronak, I think the Election Commission press conference is starting now to announce dates for the 4 state elections, which are about to kick off later this month. I think that's the Chief Election Commissioner announcing the dates. We'll sort of have the dates flash up on your screen, and maybe we can cut to it for a bit. But Ronak, tell us what's happening with Ola. I'm sure you would have sort of met them pre-IPO rounds. I mean, I don't think you put any money in before, I mean, the anchor, or I don't think you did. But what do you make of the business? I mean, 70% on top of the issue price.
So pricing of the stock apart, I think some of these companies are very interesting to track because they might become potential competitors in the future to other companies which are doing very well today. So we are seeing a great transition in energy consumption right now from your fossil fuels to battery operated technologies. And I think that wave is very strong. And we have seen China exceed all the other countries in the world in terms of providing this manufacturing capacity or even having more number of EV vehicles on the road. That trend, if it has to materialize in India as well, we will need some strong domestic champions. So it can be this company, it can be several more companies which are coming up, or the entire value chain will come up in India. We don't know. but we are not going to invest at a time when it's like a venture-backed business. We would like to invest in more stable cash flow generating companies. And that's the style choice that we have made. It's nothing to do with the companies that are there out there today. And it's okay to miss the initial part of the rally, but it's interesting to see that there are companies who are investing capital in India to build that ecosystem of electrification, which is taking China and other parts of the world by storm right now.
All right, Ronak, we appreciate you joining in and giving us your take on various sectors, themes, stocks as well, the way you'll have reshuffled things, and still holding on to cash of around 16%. That's a large quantum. Let's see the next time we chat whether or not there is some deployment that does take place. But the